Dell's earnings were released yesterday, and currently the stock price is going up more than 30%. When most of people, including me, see the Dell technology, we still think this is a computer or laptop company. But one day up 30% after earning, that's abnormal for this type of company. That means we're missing something, or the market is telling us the new investment idea. So today we're going to see how Dell is evolving in the AI era and what this earnings report is telling us, and where we may need to focus on our investment strategy going forward. Before we start, I post the breaking market news every morning on my YouTube shorts. I strongly believe this will help your investment decisions, so please check it out and subscribe to the channel so you don't miss any update. Okay, then let's get started. Recently, there were constant worries in the market. People kept asking, is AI is the bubble, or do we still have money to invest, or is AI servers demand peaking and going down now? Dell's latest earnings and conference call strongly countered those concerns. The core point from the company was simple: demand is not weak. In fact, demand is stronger than supply. The problem is not a lack of buyers for servers, but rather the challenge of meeting the huge demand with enough supply. So, the most highlighted part of this earnings report was AI servers. Dell showed strong numbers in AI server revenue and orders. They also raised their AI server annual revenue outlook from 50 billion to 60 billion. That is big jump. The reason the market reacted to this is clear. If AI server demand were dropping, it would be hard for the company to raise its guidance like this. But Dell presented even higher numbers and said uh, demand remains strong. This made the market think again. Wait, so AI is not a bubble. It's not finished yet. But I think there is um more important point here. This story is not just about AI servers selling well. It is about a shift where AI actually runs. Until now, most AI operated inside massive cloud. When we use service like ChatGPT, the actual processing doesn't happen on our computers. It runs in giant clouds and data centers owned by Microsoft, Amazon, and Google. That is why AI investment so far has focused mainly on large data centers, GPUs, and cloud providers. However, businesses are starting to make different demands. We cannot just send our company data outside. We want to process our customer information, internal documents, and factory data internally. This is especially true for financial firms, hospitals, manufacturers, and government agencies. They don't want to send their personal confidential information to outside. While putting all data into an external cloud is convenient, but security or regulatory wide often is prevented. Therefore, companies are starting to want their own infrastructure to run AI internally. Simply put, they want to build a small AI factory inside their company. I think it is easy to understand this trend if you compare it to the historical rise of personal computers. In the past, computers were massive machines located only in large institutions or corporations. It wasn't normal for individuals to own one. But as PCs spread, computing power moved away from central service servers right onto personal desks, like we use right now. From them on, software expanded, office productivity transformed, and PC makers like Dell achieved massive growth. AI is moving in a similar direction. AI was concentrated inside big cloud, and over time it is moving into corporate offices, onto factory floors, into cars, and inside real equipment like robots and drones. Of course, this does not mean everyone will get their own AI server overnight like a PC, but the general direction is identical. Just a computing power spread from central point to individuals and workplaces in the past. AI intelligence is now spreading from the cloud to internal businesses and field operations. So we can say that NVIDIA makes AI chips and technology, but not every company can just buy NVIDIA GPUs and build their own AI infrastructure. Of course, like big cloud companies can do it themselves, but ordinary businesses find it difficult. It's too expensive and they don't know how to do it. So uh, that is why company like Dell steps in to turn NVIDIA's technology into ready-to-use servers and setups for businesses. So NVIDIA makes the engine, and Dell acts as the assemble that turns the engine into a car that business can actually drive. From a company's perspective, they wonder, we know AI is important, but how do we install and run it inside our office? Dell is positioned to solve the exact problem. This is why the market has stopped viewing Dell. From a company's perspective, they wonder, we know AI is important, but how do we install and run inside our office? Dell is positioned to solve the exact problem. This is why the market has stopped viewing Dell as just a simple PC company. Expectations have grown that Dell can serve as a vital gateway for expanding enterprise AI infrastructure. Another interesting part of this conference call was the demand for traditional servers was strong, not just AI servers. This is very significant signal. When AI enters actual business workflows, it needs more than just GPUs. For AI to read, store, process, and move data within a company system, standard infrastructure like regular servers, storage, and networks must come with it. To use an analog, when a new employee named AI joins a company, they need a desk, a computer, filing cabinet, and access to the internal network to do their job. As AI grows, the surrounding infrastructure must expand too. This is exactly why the market shared Dell's earnings. If the benefits of AI investment stopped at NVIDIA's GPUs, you could argue that too much expectations were already priced in. However, if servers, storages, and networking are required as AI moves inside the business, the story changes. It means the AI infrastructure cycle can last longer and spread wider. Dell demonstrated exactly that potential in this earnings report. This trend also connects to the edge AI and physical AI. Edge AI means AI runs close to where the actual action happens. Think of self-driving car. The car needs to make choices on the road immediately. It cannot send all data to the cloud and wait for a response. The same goes for factory, robots, and drones. They must see, decide, and move right on site. For that to happen, AI must be near the actual physical location. Physical AI takes this step further. It is stage where AI doesn't just give answers on a screen, but actually moves and operates in the physical world. This includes robots, drones, self-driving cars, and smart factories. Of course, this shift won't finish overnight. It will take time, but the direction is clear. AI is leaving the cloud and coming down to the physical field. In that process, enterprise infrastructure providers like Dell are gaining attention again. Of course, we must be cautious here. The fact that Dell stock rose nearly like 30% means the market has already reacted strongly. Just because the outlook is positive doesn't mean the current price is cheap. From now on, they must prove it with hard numbers. Therefore, I think there are three things to watch going forward when we looking at Dell. First, whether AI server orders remain strong. Second, whether demand for traditional servers recovers as well. Third, whether the shift of AI from the cloud to internal corporate environment and physical sites continuously translate into actual revenue. If these three are confirmed, Dell can be continually revalued as a key beneficiary of spreading AI infrastructure, not just a simple PC company. Conversely, if only the stock price goes up while earnings lag behind, a market correction could easily happen. In the end, the core of Dell's sudden surge is this. The market was curious about if AI infrastructure investment is over. And yesterday, Dell's earning report told us clearly not yet. Instead, actually, this is spreading because from the central big massive cloud and it's going to the business and local site. just as PCs brought central computing power to individuals and workplace in the past. AI is highly likely to expand same way. And in that process, businesses like Dell's, the providing the necessary setup, will gain fresh attention. So from now, we should start to look at bigger picture of the AI investment. Because of AI, which industry and what company will get the most benefit, that will be our next investment idea. Thank you for watching my video today. If you like this video, please hit the like and subscribe channel. I'll bring another fun and interesting market insight and news. See you in the next video. I'll be back.